પિયુષ છે? પિયુષ
સાહેબ મજામાં છો? ગુડ મોર્નિંગ.
ઓ પ્રેસિડેન્ટ સાહેબ મજામાં છો?
ગુડ મોર્નિંગ સર. ગુડ મોર્નિંગ.
ગુડ મોર્નિંગ.
બોલો બિશન બાબુ.
સાહેબ મજામાં? ઓલ વેલ?
બિલકુલ મજામાં.
મારું કોર્પોરેશન નું બજેટ તો નવા આઈડિયા સાથેનું છે.
તો લાવું પડે ને યાર.
સાચી વાત છે, સાચી વાત છે. સાહેબ રિનેમ કરવું પડશે તમારે નામ. મારે કરવાનું છે, એવું કરી દો.
દેખાતું જ નથી ને પણ.
પાર્ટિસિપન્ટ ની પેનલ છે ને, એમાં તમે જાઓ અને એમાં રિનેમ તમારું હશે, એને તમારું જે હશે ને એમાં ગ્રીન કેવું કંઈક હશે, એને રિનેમ કરી દો.
મારું બરાબર છે?
પરફેક્ટ સર, પરફેક્ટ.
થેન્ક યુ.
હેમંતભાઈ તો અમારા પ્રમુખ સાહેબ ટેક્સ એવી છે યાર એકદમ. એમને બધું ખબર પડે, અમને ના આવડે આવું બધું. ક્યાં હેમંતભાઈ નું દેખાતું નથી?
હેમંતભાઈ નું તમારું થઈ ગયું સર.
દેખાય છે હવે? પણ એમિનન્ટ સ્પીકર દેખાય છે મારું તો.
એટલે એ તમે રિનેમ કરો.
હા,
રિનેમ કરો.
ક્યાં તમારા પ્રમુખ બિશન ચેરમેન?
ના, એ જોઈન થતા જશે. આવી ગયા છે, જોઈન તો થઈ ગયા છે, નામ તો દેખાય છે.
હેમંતભાઈ આવી ગયું.
હા.
કેટલા રજીસ્ટ્રેશન થયા?
1500 હતા. 1000.
હવે બંધ થઈ ગયું, રજીસ્ટ્રેશન નવું થતું નથી.
તો આપણે તો બધી લિંક મોકલી દીધી છે ને આપણા મેમ્બર માટે પ્રમુખ સાહેબ.
એટલે યુટ્યુબ ની મોકલી છે. યુટ્યુબ.
Sir, good morning.
ચેરમેન સાહેબ મજામાં છો?
All good, sir. All good. Good morning. कैसी है तबीयत? All good.
बस अभी तो चल रहा है देखो.
જેની શું થયું તમને?
કોવિડ પોઝિટિવ.
અરે તમે ક્યાં ટેસ્ટ જ કેમ કરાયો?
અરે યાર બીજા બધા થોડું, હું તો જાગૃત નાગરિક છું યાર.
નહીં પણ ઓમિક્રોન માં કોઈ પ્રોબ્લેમ નથી.
પ્રોબ્લેમ ભલે જ ના હોય પણ રેસ તો લેવા મળે ને યાર.
ના ના એ છે, એ
બીજા બધાને
ઘરવાળા ખુશ.
બેઝિકલી આપણે કોઈ બીજાને
સ્પ્રેડ ના કરીએ.
સ્પ્રેડ તો ના કરીએ, એટલીસ્ટ વી શુડ ડુ ધેટ.
તો કેટલામો દિવસ છે સર આજે?
ચોથો.
અને સળંગ 3 દિવસથી તાવ તમને આવ્યો નથી?
ના ના, ગઈકાલ સાંજ સુધી આવતો હતો, હવે સારું છે.
ઓકે ઓકે ઓકે. આરટીપીસીઆર નો સ્કોર
19.
હા, એટલે તમને તાવ આવ્યો, બરાબર છે.
તમે કેરિયર કેવો?
Ivan bhai, good morning.
ગુડ મોર્નિંગ, કેમ છો?
All good, sir.
હેમંતભાઈ હવે બધું કોમ્યુનિટી સ્પ્રેડિંગ જ થાય છે, એટલે ટ્રેકિંગ ટ્રેસિંગ ઇઝ નોટ પોસિબલ નાઉ.
પોસિબલ.
હા.
હેમંતભાઈ.
હાજી સાહેબ.
એ પેલું એક આપણે વિડીયો બનાવવાની છે, એમાં પેલું એક આવ્યો તો ફોન તમારી પર, આનો યશનો
આવ્યો તો ને?
તો એ તમે જરા કંઈક મોકલાઈ દેજો ને સાહેબ.
હા, મોકલાઈ દો.
બરાબર છે.
હા.
સૌરભભાઈ ની આવી ગઈ.
હા, બસ મને આજે સવારે મોકલ્યું છે એને.
હા,
એટલે કરી નાખી છે.
એ સૌરભભાઈ ની આવી ગઈ, સુનિલભાઈ ની આવી ગઈ, પછી આપડે મુકેશભાઈ ની આવી ગઈ.
હા.
હવે એકાદ બે લઈને પછી એ વિડીયો આપણી પેલી છે ને એની જો.
હા.
એટલે ઇટ વિલ બી અ ન્યૂ આઈડિયા.
બરાબર.
કેવું છે ગિરીશભાઈ ના ભાઈ ને હારી?
વેન્ટિલેટર પર છે સર?
हाँ सर कल वेंटिलेटर पे थे, so he is cancelling all the sessions अभी as of now. Nitin ji, you have joined. Naveen ji, Naveen Kariwal, I cannot see him. Good morning, Nitin ji.
Harit bhai, good morning. Am I audible?
Yes, yes, absolutely. Good morning.
Yes, sir. How are you all?
All good, all good.
Congratulations, first of all,
Thank you,
for the
sir.
wonderful work you did throughout the year.
Thank you, sir. You are also part of a lot of events that we did together.
Yes, absolutely. So कल हम मिल रहे हैं दिल्ली.
Yes, sir. कल शाम को.
शाम को मिलते हैं.
Yes, absolutely. Sir, हमारे साथ में बिशन भाई है, वाइस चेयरमैन. जैनिक सर इज देयर. जैनिक भाई is our past chairman and is the chairman of directors committee at GCCI. And Hemant sir is there. He is the president of GCCI. So they are also a part of.
Good morning, Bishan sir. Jainik sir.
Good morning, sir. Good morning.
Hemant sir. Good morning. Anjali ma'am. Good morning.
Good morning.
Anjali Ben has joined. Yeah, Anjali Ben is also there.
सर का रीनेम करने की जरूरत है. नाम हरित भाई.
I'll just check. Naveen ji, you have joined.
Yes, नवीन जी ने ज्वाइन नहीं किया है.
I'll just check with him once.
एमिनेंट स्पीकर है कोई एक, यानी मैंने बोला कि वही हो सकते हैं.
So Naveen ji is just joining.
આપણે બીજા બધા તો અહીંયા હોસ્ટમાં નહીં દેખાય ને.
Sir, बाकी YouTube live पे है. There are more than 1800 registrations. So everybody will be given the YouTube link. So अपने members of GCCI, like executive committee of GCCI, Ahmedabad branch and Gurugram branch only committee members have been given the Zoom ID. Rest everybody is on the YouTube live.
अहमदाबाद ब्रांच की चैनल पर ही होगा ना वो YouTube का ये.
Yes, वो लिंक शेयर किया विशाल भाई. आपको भी if anybody asks, you can share them.
Yes.
એટલે ટોટલ પાર્ટિસિપન્ટ કેટલા લાઈવ સાંભળે છે?
That we will get to know once we start. As of now, there are around 150 people who are watching us live, and the total registrations are more than 1800.
Okay.
So they will join in maybe sometime.
કર્ણાવતી કરવાની બહુ મજા આવે, પણ હવે આને કારણે.
True, sir. That's a different feeling.
Yes, we are live on YouTube also. अभी मेरे ख्याल से दिख रहा है.
Good morning, Naveen sir.
Good morning, sir. How are you?
Sir, all good. How are you, sir?
All well, sir. Congratulations on your award.
Thank you so much, sir.
You have put in a lot of hard work, so naturally, it's well deserved.
Sir, thank you.
Good morning, sir. Good morning.
Morning.
Good morning, Naveen sir.
Namaskar, sir. Nitin ji. So this is a joint program, sir.
Yes, sir. So Ahmedabad branch along with Gurugram branch and the Gujarat Chamber of Commerce and Industry.
Okay.
We all are doing it together, sir, and we have more than 1800 registrations. So,
Okay.
so all the registered participants will be on the YouTube live.
Okay.
All the committee members are there on the Zoom. The rest
Okay.
everybody will be joining on YouTube live, sir.
No problem.
So
this
I think let us wait for a couple of minutes, sir. We'll start in a couple of minutes.
Yeah, no problem. So this is a businessman and chartered accountant, sir, professionals.
Yes, sir. Businessmen are also there.
Yeah. Accordingly, I will just deliberate.
Yes, sir. Sir, Hemant sir is there. Hemant Shah is the president of GCCI, and Jainik Vakil is the chairman of Direct Tax Committee, and our past chairman. He's also with us. And Nitin Kataria is the chairman of Gurugram branch. And from our team, we have Bishan Bhai and Anjali Ben join us as of now. Other members are joining in. Sunil Bhai is also
Sunil Bhai
joining.
yes.
Yes, Sunil Bhai, our treasurer, is also joining.
So Nitin Bhai is Gurugram, no?
Yes, sir.
Yes, sir. Gurugram branch.
Jainik Vakil is Direct Tax Committee Chairman.
GCCI, yes, sir.
Of
And he's
GCCI.
our past chairman also.
GCCI and past chairman.
And Hemant Shah, sir, Hemant Bhai is there as the president of GCCI.
President of
GCCI, the
GCC.
Gujarat Chamber.
Yeah,
Yes.
yeah.
The apex body of commerce and industry of Gujarat.
Yes, sir. And vice chairman is Bishan Bhai, no?
Yes, sir. Bishan Bhai is vice chairman.
And Anjali?
Sir, Anjali Ben is the secretary and Sunil Bhai is the treasurer. He's also joining.
Okay.
As of now, there are 225 we're watching live. I think once we go live at 11, more members will join in.
That's fine. Yeah. That's okay, no problem. That is it, huh? What happened, sir? I think Ahuja sir's brother was unwell, no?
Yes, sir. His brother is actually on ventilator, is not well.
Okay, okay.
So, sir,
Younger
yesterday
brother,
called in the
younger brother.
afternoon. Younger brother, sir.
Yeah.
So, sir is now cancelling all the sessions that were there for planned for his deliberations.
Unfortunately.
Sir, it's 11:02 now. We can go live on YouTube. Jainik Bhai, Hemant Bhai, we all are okay now.
Yes, yes, absolutely.
Okay, okay. Anjali Ben, we can start now.
Anjali Ben, you require to unmute.
Should we start?
Yes, we can start.
Esteemed speaker for today, CA Naveen Khariwal ji. GCCI President Shri Hemant Shah. Chairman Ahmedabad Branch CA Harit Dhariwal. Chairman Direct Tax Committee GCCI CA Jainik Vakil. CA Nitin Kataria, Chairman Gurugram Branch. Vice Chairman CA Bishan Shah. Treasurer Ahmedabad Branch CA Sunil Sanghvi. GCCI members, Chartered Accountants, dear friends, a very, very good morning from Anjali Choksi, Secretary of Ahmedabad Branch. Welcome to this first session on Union Budget 2022, organized by Ahmedabad Branch in association with GCCI. There will be a second session on Saturday to be conducted by Dr. Advocate Saurabh Sopakar ji. So let's begin the session with ICI motto. I request everyone to join us for ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Welcome back. I would now request Chairman Ahmedabad Branch, C. Harit Dhariwal, to give welcome address.
Respected faculty for today's session, CA Naveen Khariwalji has joined us from Bengaluru. Central Council member CA Aniket Talati, President of GCCI Shri Hemant Bhai Shah, the Directors Committee Chairman at GCCI CA Jainik Vakil, who is also our past chairman, the Chairman of Gurugram Branch CA Nitin Kataria ji and his team, the teams at Ahmedabad Branch, Vishen Bhai, Anjali Ben, Sunil Bhai, Rahul Bhai, Fenil, Ganesh Bhai, our Regional Council members Vikas Bhai, Chintan Bhai, Hitesh Bhai, seniors in profession, members of GCCI, students and dear friends. A very good morning to all of you. Welcome to the most awaited session on the technical analysis of Finance Bill 2023. Due to some unavoidable circumstances, Dr. Girish Ahuja sir could not join us for today's session, but I am extremely thankful and obliged to CA Naveen Khariwalji for agreeing to come today at such a short notice. My sincere thanks to team at GCCI, the President and Chairman of Directors Committee at GCCI for all their support. Friends, at the outset, let me first of all congratulate each and every member and each and every student of Ahmedabad branch. We are delighted to share with you that Ahmedabad branch has been awarded the best branch for both members and students at national level. Getting this first prize in both the categories would not have been possible without the untiring efforts of the entire committee and the support and involvement of all the members and students at branch. My sincere thanks to all of you. Coming to budget, Honorable Finance Minister Nirmala Sitharaman's fourth successive budget and her shortest ever, while commonsensical in nature, but was perhaps not exactly bubbling with the new ideas that we most of us expected. With the economy still in search of durable momentum that could help entrench the recovery from the last year's contraction, maybe there was a need to address the flagging consumer spending in the wake of erosion in real incomes and savings through a combination of tax breaks for the middle class and cash handouts for the poor. But having said that, there were also a few amendments leading to the direct taxes, and today Naveen ji is going to take all of them for us. I once again thank him for his gesture today and thank all the participants. Have a great learning. Thank you.
Thank you, Chairman. I would now request CCM CA Aniket Talati to share his welcome address.
I think Aniket is not joining. Yeah, we can go ahead.
Okay. I would now request President GCCI Shri Hemant Shah to give his welcome address.
Namaskar and a very good morning to all of you. On behalf of Gujarat Chamber of Commerce and Industries, it is a great pleasure for me to welcome our esteemed speaker for today, Shri Naveen Khariwal from Bengaluru, for this virtual session. I also welcome all the office bearers of the Ahmedabad branch of WIRC, members of professional fraternity, GCCI members, and members from the media. First of all, I would like to thank the Ahmedabad branch for joining with us since last couple of years. This detailed discussion is really beneficial to our members. Friends, the budget since last couple of years looks very simple, but there are many fine prints, and only with the detailed session like this, we really come to know what is really in store for us. Since this budget discussion is going to be very fruitful for the members of the GCCI, and I don't want to take much of your time, and once again welcome you all and look forward to a very meaningful discussion. Thank you very much.
Thank you, sir, for your wishes and giving a wonderful start to the session. I would now request Chairman Direct Tax Committee GCCI and our past chairman and our own CA Jainik Vakil to share his welcome address.
Today's learned speaker Shri Khariwal ji, Central Council member and my friend Shri Aniket Talati, President of most prestigious and apex body of Chamber of Commerce and Industry of Gujarat, Shri Hemant Bhai, Chairman of Ahmedabad branch Harit and his entire team, friends from the industry and profession, warm welcome to all of you. The Direct Tax Committee of Chamber has always had the privilege and pleasure of welcoming such distinguished guests to enlighten us on such an important topics. And we are glad to associate with the Institute of Chartered Accountants of India of Ahmedabad branch to organize today such an informative and interesting session on the Finance Bill 22-23. Friends, the Union budget has always remained important for all sections of the society, including businessmen, employees, and professionals, due to its wide impact. However, it is becoming increasingly difficult to understand the impact of the budget, as there are many latent provisions in the Finance Bill. In order to understand the implied meanings and the technical aspects of the provision, their implication from various angles, in-depth analysis, and comparison with the previous Finance Bill is needed. Today's analysis session will provide an opportunity to understand this intricate topic both from an expert as well as businessman's perspective, as our speaker is extremely skilled both in technical analysis as well as its presentation in simplified manner. Without wasting too much, let us all embark upon the enlightening and interesting journey of understanding Finance Bill 22-23 with Naveen ji as our guide. Thank you.
Thank you for your wishes, Jainik Vakil ji. So let's start the session. I would now request CA Nitin Kataria ji to introduce esteemed faculty for today, CA Naveen Khariwal ji.
Thank you, Anjali ma'am, and greetings from the Gurgaon branch of NISA of ICAI, and a very good morning to our esteemed speaker of the day, Naveen Khariwal ji, and Chairman Harit Dhariwal ji, Vishan ji, and our CCM member Aniket Talati ji. Also, we are having with us from GCCI, Honorable President Hemant Shah ji, and Jainik Vakil ji, Chairman of Direct Tax Committee. Firstly, I would like to congratulate Harit and the whole team of Ahmedabad branch for securing the Best Branch Award from the prestigious Institute of Chartered Accountants of India. And it has become a habit of Ahmedabad branch from so many years to get this award. And we really feel so proud that at a branch level, they are doing their best and they are producing so much for the benefit of the members. In fact, we used to follow Ahmedabad branch for many programs that we can see and learn from them. So it is an honor for us, for Gurugram branch members, to share stage with the Ahmedabad branch. Thanks once again. And I'd also like to consider our request to jointly host this program. Thank you. So with your permission now, I'd like to formally read out the profile of our guest speaker of the day, Naveen ji. Naveen ji comes from a family of a chartered accountants. His grandfather, father, and brothers are chartered accountants. He has a specialization in direct taxes. He is a co-opted member of the Direct Tax Committee of ICAI, New Delhi, for the year 2021. Members of the Central Taxes, Corporate Laws, and GST Committee of Federation of Karnataka Chambers of Commerce and Industry, FKCCI, Bengaluru. Members in the Finance Advisory Committee of Karnataka State Cricket Association, Bangalore. He is also a member of the Study Circle Study Group Committee of the Chambers of Tax Consultants, Mumbai. He was a part of the team nominated by Bangalore branch of SIRC of ICAI to represent before the Honorable Justice R.V. Ishwar Committee for Simplification of the Taxes. He has been a coordinator and moderator of Jilasa one-day workshop on scrutiny, surveys, and summons. He is a eminent speaker, coordinator, moderator of one-day workshop on issues of assessment, reassessment, e-assessments, and replies online prosecution during the TDS organized by Bangalore branch. He has also he was also coordinator moderator of tax audits and ICDS, including Form 3CD, 3CB, 3CA, and he has also acted as a moderator on 28th residential refresher course RRC at the Silent Shore Resort and Spa, Mysuru, organized by Baroda branch of WIRC. Apart from this, there is a long list where he has held the seminars and he has taken online programs. So I think that this is the third day since the budget has been presented by our Honorable Finance Minister, and we are right on the spot to elaborate the budget to our general members. So with this, not taking too much of time, I hope that this is going to be a very great session for all of us. Over to you, Anjali ma'am. Thanks a lot.
Thank you, Nitin, for giving wonderful introduction. I would now request the esteemed faculty, CA Naveen Khariwal ji, to take the session ahead.
Thank you, Anjali. Respected Chairman of Ahmedabad branch, Shri Harit Dhariwal, President of GCCI, Shri Hemant Shah ji, Shri Jainik Vakil, Chairman, Direct Taxes Committee and past Chairman of Ahmedabad branch, Shri Nitin Kataria ji, Chairman of Gurugram branch, Vishan Shah ji, Vice Chairman, Dr. Anjali Choksi, Secretary, Sunil Sangvi ji, Treasurer, all the GCCI members and chartered accountants, and my good friends and all other viewers. Now, I have been asked to deliberate on the proposals of Finance Bill 2022 on direct taxes. So let me tell you, my dear friends, the first good news is not a single naya paisa has been collected by the finance minister by way of increase in tax slabs. Nowhere there is no change in increase in tax slabs as directed by the Honorable Prime Minister of this country. The finance minister has not raised a single rupee of taxes. The slab rates remain constant and unchanged. Secondly, let me tell you, for the first time, a full-fledged lady finance minister is presenting her fourth budget after Srimati Indira Gandhi, but she was also the prime minister. This is a full-time, full-fledged finance minister. And, she changed her style also. She did not come in the old briefcase, which was carried during the British regime and which continued even a decade ago. So she came in her Bahi Khata, and on that there was a national emblem. And in that Bahi Khata was a tablet. In that tablet, you have the budget speech and the, memorandum. And if my humble request to all the chartered accountants, especially, what a beautiful memorandum it is they have prepared this time. Go through the memorandum in detail. All the case laws are there. I have also, I'll be also discussing the memorandum threadbare, but you go to the memorandum, they have done beautiful research, enormous research. Anyway, so in this budget, what has happened on the day of the budget, at the end of her speech, the Honorable Finance Minister announced that total GST collection has exceeded the target, and the first time since the inception of GST, highest collection, my dear friends, 1.38 lakh crore for the month of January. Then, again, what good news she gave is on the day of the budget itself, the good news came that the cost of commercial LPG cylinder was reduced by 91 rupees 50 paisa. And then, a lot of announcements were made because they are looking at India 25 years now from now, 75th year of independence. We are, looking at the 100 years, a futuristic inclusive budget, aim to create 60 lakh jobs, 25,000, additional national highways, 20,000 crore to boost your transport infra, 400 new Vande Bharat trains in next 3 years, 12,000 new rail network, 2.73 lakh crore as direct payment for minimum support price for all the farmers, and hospitality sector to regain your pre-COVID level, that is 5 lakh crore cover for the hospitality industries, 2 lakh crore for the micro and small enterprises, 2 lakh Anganwadis to be updated, 8.7 crore spent on Jal Shakti mission, 18 lakh affordable houses by 2023, 48,000 crore for PM Awas Yojana, 10 crore for Jal Jeevan mission, and the spectrum auction for 5G in 2022 for rollout. And then 68% outlay, I'm telling you, for the first time, 68% outlay for Make in India, all the defense buys, 68% outlay only from the domestic market. They are not going to be imported anymore now. And the capex has stepped up from 5.54 lakh crore to 7.50 lakh crore. That is an increase in 35.4% in the capex expenditure for 2022. So anyway, so there are a lot of these announcements in the budgets, and the economy is on the right track. And but for the pandemic, India now was 6th highest GDP. Just Great Britain overtook us, else we had overtaken Great Britain. Last 3-4 years, we have overtaken Brazil, we have overtaken Canada, and we just overtook Great Britain also and became the 6th largest GDP in the world. But unfortunately, because of the pandemic, Great Britain just now has overtaken again. Now coming to my direct tax proposals per se, Let me start my presentation. Is it visible, sir?
Yes, sir. It's
Yes,
visible.
Yes, sir. Yes, sir.
Now we are starting with the budget speech of the finance minister. See, the finance minister, starts with this para 120, and she reads a couplet from, the Mahabharata. She wants to thank all the taxpayers of the country who have contributed immensely and strengthened the hands of the government, helping their fellow citizens in the hour of need. And now she says a very important line, telling, I am not going to collect any taxes now. King must make arrangement for yoga kshema, that is a welfare, by way of abandoning any laxity and by governing the state in line with dharma, along with collecting taxes which are in consonance with dharma. So this will be the theme of the budget. And then she goes, drawing wisdom from ancient text, we continue on the path to progress. The proposals in this budget, while continuing with our declared policy of stable and predictable tax regime, intend to bring more reforms that will take ahead our vision to establish a trustworthy tax regime. This will further simplify the tax system, promote voluntary compliance by taxpayers, and reduce litigation. Now, what is the rationale for the tax rates and slabs unchanged? My dear friends, 96% of non-salaried SSEs file returns of less than rupees 10 lakhs a year, and 88% file under rupees 5 lakhs. Of all the returns filed, 75% of the returns are for less than rupees 5 lakhs, and 92% of the returns are less than 10 lakh rupees. Therefore, on an average, the non-salaried pays a mere 31,500 per return, and the salaried pays a little over rupees 90,000. So then the relief would go to the rich people. This is what is the analysis by the, the finance minister's team. Now, as I told you, there are no change in slab rates. We will not discuss about this. As and where we come, we will discuss about the other provisions, including surcharge, etc. Now, there is a concept of updated return. Listen very carefully. The finance minister has introduced something called as updated return. Why on earth is this required? What is the change? Why is the concept of updated return required? Now, as you know, my dear friends, return is filed under 139(1), original return. Return can be a belated return under 139(4). Return can be a revised return under 139(5). What is the due date for all this? The due date last year's budget is before 3 months from the end of the assessment year. So the due date, but for the pandemic, for this year, it was only 31st of December. So there are 3 due dates, all of you know. 31st of July. You are giving me 5 months time to revise the return, because beyond 31st of December, I cannot revise the return. I cannot file a return at all. Forget the question of filing a belated return or a revised return. I can't file a return at all. The system will not allow me to file a return. But for the pandemic, now the due date was extended, and you are filing the return with penalty. Else 31st December was the due date. Next, when the due date is October or November, how much months I have, sir? How many months? November, I have hardly 2 months. And October, it is hardly 3 months. So they understood this. And plus, if you see the finance minister's speech growing at an accelerated pace, and people are undertaking multiple financial transactions, robust framework of reporting of taxpayer transactions. My humble, submission to all of you present here, do not file the return without entering into the taxpayer's account on the registered account on the income tax portal. There are so much plethora of information. More than 50 transactions are covered now. In the AIS annual information summary, in your 26 years, in your TIS tax information summary, your part G of 26 years, part H of 26 years, etc. All the information is there. So she's telling there is so much information. As and when you realize that some income is left out, don't worry, she says. You please update your return, file an updated return, concept of updated return. New section is introduced, 139(8)(a). But it comes with certain riders. What is she telling? She's telling, don't worry, your due date has expired. You can't file a return 139(1), you can't file a return 139(4), you can't file a return 139(5), or you have already filed a return on these 3 sections. And now you have realized that there is some mistake, or you could not file the return declaring certain income. Now she's giving you 2 years time. She's giving you 2 years from the end of relevant assessment year. You please file an updated return on 139(8)(a), subject to certain conditions. What are the conditions? Now, she's telling you these conditions are, this is the section 139(8)(a). So whether or not you have filed a return 139(1), 4 or 5, you can very well furnish an updated return. Don't worry. Due date is 24 months, within 24 months from the end of assessment year. Now, the section 139(8)(a) would not apply if the updated return is return of loss. So return of loss, you are not allowed to file. Secondly, if it decreases the total tax liability as determined in the return filed under 139(1), 4 or 5. Also, it cannot result in a refund or it cannot increase the refund due on the basis of return furnished under 139(1), 4 or 5. Next, all these persons also are not eligible to furnish an updated return. What person, sir? First is searched, a person who has been searched. Search initiated 132 or books of accounts, documents, etc. requisition 132A or survey conducted under 133A other than 2A, that is your TDS survey. Or notice has been issued that any money, bullion, jewelry, valuable article or thing seized or requisitioned under section 132 or 132A, such a person also cannot file an updated return. Or books of accounts, documents seized or requisitioned under 132 or 132A in the case of any person pertains to or any information contained there in your earlier 153C regime. Now, again, how to calculate? They are telling here assessment year relevant to the previous year in which search is initiated or survey and 2 years preceding such assessment year. Then also no updated return shall be filed where already an updated return is filed. So be careful, my dear friends. An updated return furnished under 139(8)(a) cannot be revised.
Sir, sorry to interrupt. Sir, slides are not changing. You can just have a full screen and then slides you can change also accordingly.
Slides are not changing, huh?
No, sir.
Okay.
If you can do a full screen and then maybe, yes, now it's okay, sir.
Is it changing, sir, now?
So we are on the 23rd slide as what is seen.
No problem. 1 second. Now say I am in 139(8)(a). Following amendments to the Act are proposed for incorporating above provisions.
No, sir. I can see 23rd slide. A person shall not be eligible. There is no other. Yeah, now it is moving. Sir.
Then I'll keep like this only, I think.
Yeah, no problem.
Okay. So next, an updated return also cannot be revised. So be careful, my dear friends. A return filed under 139(8)(a) cannot be revised. Plus, if there is any proceeding for assessment or reassessment or recomputation is pending or has been completed, in that case also you cannot file an updated return on 139(8)(a). So the whole idea is if you have received a scrutiny notice on 143(2), you cannot furnish updated return. If you have received a notice on 148, you cannot furnish a return. If you have received a notice on 148A, you can definitely file a return, not 148. If you have received a notice on 148A, jump onto the bandwagon and decide, because 148 is the beginning of the proceeding. 148A, the department is still deciding. So if 148A comes, although it is, not free from litigation, my opinion, we should go ahead and file the return on 139(8)(a), declaring all the income, which is not declared in the regular returns. Also, the assessing officer, my dear friends, will not allow you to file the return under 139(8)(a) if he has got information in respect of such person in his possession under PMLA or Black Money Undisclosed Foreign Income and Assets Act, Imposition of Tax Act 15, or Prohibition of Benami Property Transactions Act 1988. You know that Benami Transactions Act 1988 was a sleeping beauty introduced way back in 1988 under Rajiv Gandhi's regime, was a sleeping beauty up to 2016, when the finance minister and the then prime minister introduced that Benami Act on 1st of November, just before demonetization. Everything was very well planned. And they did want a cash crunch after demonetization because they wanted to reduce that. Anyway, before 8th of November, this Benami property was introduced as on 1st of November. Then your smugglers and, foreign exchange manipulators forfeiture of act, and the same has been communicated to him prior to date of filing his return. Now, all the technical analysis, same has been communicated to him. So if one of your clients, anybody, information is there in possession of assessing officer, but the law says has been communicated to him. So even before the assessee has received a communication, if at all he has filed the return of income under 139(8)(a), declared the income, paid the taxes. Anyway, that is not free from litigation. The section, as they say, has been communicated to him. I did not receive any communication. In any case, my whole idea is I want to declare income. I want to pay the tax. I want to use this section 139(8)(a). Anyway, so here they are telling much before the same has been communicated to him prior to the date of filing return under the proposed 139(8)(a). That information also, if it is 90(a) communicated to him, you cannot file the return. If prosecution has been initiated in chapter 21, prior to the date of filing return under this 139(8)(a), you cannot file the return, and also such persons or class of persons as may be notified by the board. Now, similarly, 139(9) is also amended. They say, unless and until you pay the tax for 139(1), 4 and 5, you know 140A. So for 139(8)A, they have introduced a new provision, 140B. They are telling pay the tax, pay the additional tax as determined under 140B, and then, you know, you please, such return is accompanied by proof of payment of tax as required anyway. That is, you know, mere formality, because now you cannot attach that proof, etc. You need to pay the tax and fill up in the return. That's all. So now what is that 140B? 140B, what are they telling? There are two types of calculations, where return is filed and where no return is filed. So if the return is, no return is furnished earlier, how to calculate this tax payable under 140B? So if no return is furnished, then how to calculate the tax? The law is telling, before furnishing the return under section 139(8)A, along with the interest under 234 ABC, etc., then you please pay the tax after taking into account, reduce the advance tax, take into account TDS, TCS, relief of tax claim under 89, under 1991, or account of any tax paid in country outside of India, relief claimed under 90A on account of tax paid in any specified territory outside of India, or tax credit brought forward tax rate 115JAA or 115JD. Okay, and after that you please calculate the additional tax. Such updated return shall also be accompanied by proof of payment of tax, additional tax, interest and fee, whatever. Now, in case return of income has been furnished, same thing. So before furnishing the return 139(8)A, you'll be liable to pay the pay tax together along with interest and fee payable for delay at 234 ABC. Then again, you will get all this credit. 140A tax paid because return was filed earlier. So claim credit for 140A. All the TDS, TCS appearing in chapter 17B, relief claimed in section 90, 91, relief in section 90A, tax credit, etc. available under 115JA, JB. Now, aforesaid tax shall be increased by amount of refund, if any, issued in respect of the earlier return. So therefore, now how to calculate additional tax? Additional tax payable at the time of furnishing return under 139(8)A will be equal to 25% of aggregate of tax and interest payable if such return is furnished after expiry of time limit available under section 139(4) or 5, but before completion of 12 months from the end of relevant assessment year. So law is telling you are filing an updated return under 139(8)A before 12 months from the end of assessment year, then please pay additional tax at 25% of aggregate tax and interest payable. Suppose the return is furnished after the expiry of 12 months, but I told you outer time limit is what? Only 24 months. So we are furnishing the return under 139(8)A after expiry of 12 months from the end of relevant assessment year, but before the completion of the period of 24 months from the end of assessment year, additional tax shall be 50% of aggregate of tax and interest payable. So that additional income tax, you know, that includes even surcharge and cess, etc. by whatever name called. Don't worry, scheme will be announced and they will tell you how to compute, etc. So this is all about 139(8)A. You must always remember, you cannot increase the loss. You want, you can decrease the loss. Loss cannot be increased. Refund cannot be increased. And you cannot claim refund at all in this return. So this is the concept. Basically, because they have plethora of information online. They are telling you forgot this capital gains, you forgot this house property income, you forgot salary, you forgot to even declare your income from bitcoins, etc. We'll be discussing that virtual digital asset, etc. They are telling use the returns, use this 139(8)A, but pay tax within 24 months. It is 50%. Within 12 months and within beyond 12 months, within 12 months and between 12 months and 24 months and up to 12 months, they are telling. So 25% as well as 50%, whatever. Now, this is the second amendment. This is also very nice amendment. Litigation management to avoid repetitive appeals by the department. So what madam is telling, this is the budget speech. It has been observed that a lot of time and resources are consumed in filing of appeals which involve identical issues. Taking forward our policy of sound litigation management, I propose to provide that if a question of law in the case of an assessee is identical to a question of law which is pending in appeal before the High Court or Supreme Court, and in any case the filing of further appeal in the case of this assessee by the department shall be deferred till such question of law is decided by the jurisdictional High Court or Supreme Court. This only for the revenue, my dear friends, not for the assessees. They are telling revenue, wait, don't file the appeal. Let the matter, get settled at the Supreme Court or High Court. And then till that time, we'll wait. And because it's an identical question of law, I need not file appeal. I'll wait. This will greatly help in reducing the repeated litigation between taxpayers in the department. So what was happening? Earlier, there was a section 158 AA. It was there. Now it is a sunset clause up to 31st March 22. After that, new section is introduced, 158 AB. What was 158 A? So in this case, 158 A, what it provided, where the commissioner or principal commissioner was of the opinion that any question of law arising in the case of an assessee was identical with the question of law arising for another assessment year, which was pending before the Supreme Court and which was also in favor of the assessee, the commissioner or principal commissioner would direct the assessing officer to make an application to the Honorable ITAT stating that the question of law appeal on which the question of law may be filed when the decision of the question of law becomes final in the other case, subject obviously to the acceptance of the same by the assessee. So now the Finance Bill wants to take this forward. They are telling you such a principle could be applied to cases where a question of law is common and where a decision of the jurisdictional High Court on the same question of law is available. Filing of appeal in such cases can be avoided to reduce the amount of litigation. For example, in the case of Naveen Khariwal, there is a appeal pending in the High Court and appeal pending in the Supreme Court. So what are they telling? In the case of Naveen Khariwal for another year, there is a question of law. And in the case of another assessee, say, in Nitin Kataria's case, same question of appeal is pending. Same question of law is pending. So they are telling, in my case, and in Nitin Kataria's case also, same question of law is pending. So until that question of law is settled by the highest court of the law in the land, you please wait. But they have to take the acceptance of the assessee. So they will apply in Nitin Kataria's case subject to acceptance. Yes. And in my case, subject to my acceptance in Nitin Kataria's case, because question of law is same in the assessee. Earlier it was in the same person. Now they're telling, wait, same issue is there. I will consider that if in your case you are agreeing and you are giving me the acceptance. So this is the law. 158 AB is newly introduced, telling that where the collegium is what? Collegium is consisting of principal commissioner or commissioner. Opinion that any question of law is identical with the question of law already raised in my case or in the case of any other assessee. See, this has come now. Any other assessee for any assessment year which is pending before the High Court or Supreme Court against the order of appellate tribunal or High Court, then as the case may be in favor of such assessee, it may decide and intimate the commissioner or principal commissioner, who the collegium, not to file an appeal at this stage to the appellate tribunal or to the High Court or to the appellate tribunal, etc. What is the time limit? They will direct the further the commissioner or principal commissioner shall, on receipt of communication from the collegium will take the decision whether to file appeal or not to file appeal by the revenue. Direct the AO to make an application to the appellate tribunal or jurisdictional High Court in the prescribed form within 60 days from the receipt of order of CIT appeals, or within 120 days from receipt of order of tribunal, stating that an appeal on the question of law arising in the relevant case may be filed only when the decision on the question of law becomes final in the other case. And now the CIT or the principal CIT shall direct the AO to make such an application only, I told you, if the acceptance is received from the assessee. Acceptance should be received from the assessee to the effect that the question of law in the other case is identical to that arising in the relevant case. This is only for the appeal from the revenue, not from the appeal filed by the assessee. You can anyway file the appeal. Therefore, your business is not hurt. You can continue to file appeal. So the meaning of collegium is, collegium shall comprise of 2 or more chief commissioners or principal commissioners or commissioners of income tax. Now they are telling where the order of the CIT appeals or the order of tribunal is not in conformity with the final decision on question of law in the other case, as and when the order is received. Then that is in my case, when I compare with Nitin Kataria's case, then the commissioner or the principal commissioner may direct the AO to appeal to the ITAT or Judicial High Court, as the case may be, against such order. Then this is one simple amendment, of the Dispute Resolution Committee. That the Dispute Resolution Committee in 19A chapter, Finance Act 21, they introduced a Dispute Resolution Committee for all the specified persons who are for dispute resolution, subject to fulfillment of certain conditions. But what happened, that existing provisions of that section did not contain any provision to give the enabling effect to the order of the DRC, your Dispute Resolution Committee. So therefore, now they are telling, I am going to insert a new subsection to enable the assessing officer to pass an order giving effect to the resolution of dispute by the DRC. Again, this issue is there, we are all claiming health and education cess as business expenditure based on a board circular, based on Rajasthan High Court, based on Bombay High Court in Shesha, based on Chambal Fertilizers in Rajasthan High Court. So we are continuing to claim deduction of health and education cess as business expenditure. So the government is saying, no, this is not the intention of law at all. This is a total misrepresentation, misinterpretation of the act and the circular and the case law. So therefore, this is what is there in the budget, your memorandum. Certain taxpayers are claiming deduction on account of cess or surcharge under 40 of the act, claiming that cess has not been specifically mentioned in the aforesaid provisions of 40A2, and therefore cess is an allowable expenditure. This view has also been upheld by court in a few judgments. Further, courts are also relying upon the CBDT circular dated 18th May 1967. And as I told you, relying on Bombay High Court in Shesha, Chambal Fertilizers, Rajasthan High Court, etc. However, in a recent judgment of the ITAT Calcutta in the case of Canoria Chemicals and Industries, wherein it is clearly held by the ITAT Calcutta after discussing those two High Court judgments as well as the circular, and the ITAT Calcutta has held that cess is not to be allowed as a deduction. And then Calcutta High Court is going on to rely on the Supreme Court judgment in CIT versus K. Srinivasan, 1972, 83 ITR 346, wherein the following questions came for adjudication before the Honorable Apex Court: whether the words income tax in Finance Act of 64 would include surcharge, additional cess, etc. So that judgments are produced. These are all the judgments. And finally, they have come to the conclusion now that from the above discussion, it may be seen that the interpretations of two high courts and various ITATs are against the intention of the legislature and not in line with the judgment of the Honorable Supreme Court in V. Srinivasan's case. Hence, in order to make the intention of legislature clear, make it free from misinterpretation, it is now proposed to include an explanation retrospectively in the act itself to clarify that for the purposes of the subclass. It is from 5.6, my dear friends. This explanation is inserted, retrospectively in the act for the purpose of subclass. Term tax includes and shall be deemed to have always included any surcharge or cess by whatever name called on such tax. Amendment is made retrospectively to make clear the position irrespective of the circular of the CBDT, and as I told you, retrospectively applicable from assessment year 5-6 onwards. Now the next amendment, business reorganization. Let me tell you, my dear friends, Madam would have spoken for about 10 minutes only on the income tax proposals, but there are 84 amendments. 84 amendments are there. We will try to complete as many amendments as possible. Kindly bear with me. So next, we come to business reorganization, modified return of income. So now the finance bill, they want to insert a new section 170 capital A to enable the entities going to business reorganization. We had a gala time quoting all the judgments right from Supreme Court, High Court, Tribunal, etc., etc. The case of amalgamation, amalgamating company, amalgamated company, demerger, demerged company, resulting company, etc., etc. That company after demerger, after merger, amalgamation, after amalgamation, the amalgamating company does not exist at all, and so many case laws we used to quote. So this also has picked up by the department, and now amendment is made. So all that case laws have also gone. What they have done this time, let me tell you, they have taken all the case laws in favor of the SSC, kept there, neatly taken one case law and passed, and made all the amendments. That is how finance bill is done, passed now, Finance Act. Anyway, so this finance bill proposes to insert 170 capital A to enable the entities going through business reorganization for filing of modified returns. Now there is a concept of updated return. Now there is a concept of modified return. Please see, modified return for the period between date of effectivity of the order and date of issuance of final order of the competent authority. So this 170A will have an overriding effect on section 139 and provides that in case of a business reorganization where prior to the High Court or tribunal or adjudicating authority's order, any return of income has been furnished by the successor under the provisions of 139 for any year relevant to the previous year in which such order applies, a modified return in the prescribed form and manner can be furnished by the successor within 6 months from the end of the month in which the order, competent authority such as NCLT in case of merger, demerger was issued. It takes time. You go to the court, the amalgamation, order, it takes around about 2 years, 1.5 years, 3 years, etc. But it will be applicable from the beginning itself. So therefore, they are telling, wait, don't worry. Now NCLT has passed the order. Now I will tell the successor company within 6 months from the end of the month in which order of the competent authority, such as NCLT, in the case of merger, demerger is issued. Now you file the return, and the assessment will be made on the successor. So you cannot raise that issue now. Then what about validity of proceedings against the predecessor company? So the period of time involved in concluding a business reorganization is a long drawn process and is not time bound. And often the reorganization is from a preceding date. The income tax proceedings and assessments are carried on and often completed qua the predecessor entities only during the pendency of the court proceedings. So all these were getting knocked off at the tribunal level, high court level, and at the Supreme Court level. Various courts have held that such proceedings and consequent assessments illegal as the predecessor assessee ceases to exist in the midst of a perfectly valid and legal proceeding. Now the Finance Act Bill 22, with a view to clarify about the validity of such proceeding, proposes to insert 172A. So this proposed subsection provides that the assessment or other proceedings pending or completed on the predecessor in the event of a business organization shall be deemed to have been made on the successor. Next, what about the demand? Modification of the demand. For example, your IBC, etc., where originally there was a demand, and then because of IBC, the demand is reduced. So they are telling, don't worry, your demand is reduced because of insolvency petitions, etc. So I am now going to issue a new demand notice. It is not 156. The demand notice now is 156. I will issue a new demand notice 156 capital A. Very welcome amendment now for the department now. In the course of business reorganization, there are instances wherein the court, tribunal, or adjudicating authority recast the entire liabilities to ensure future viability of sick entities and modify the tax demands created by various proceedings in the past. So presently, there is no procedure or mechanism provided in the Act to reduce such demands from outstanding demand register. You know that. Therefore, new section 156A is now inserted to give effect to the orders of competent authority and to modify such demands in accordance with the directions. So 156A, the new section states that it provides that any tax, interest, penalty, fine, or any other sum for which a notice of demand was issued under section 156 is reduced as a result of the court order, tribunal order, adjudicating authority's order, then the AO shall modify the demand payable in conformity with such order and shall thereafter serve a notice of demand specifying the sum payable on the assessee. It is also proposes that where such order is modified by NCLAT or the Supreme Court, modified notice of demand shall be revised accordingly. Again, this 14A. So clarification respect of disallowance and 14A in absence of exempt income. So there were, board circulars and so many case laws again, high court case laws, IT, etc., saying that wherever there is no exempt income earned during the year, there is no question of disallowance under 14A. Now they are telling nothing doing, sir. They are telling CBDT circular number 5/14 dated 11/14 clarifying that Rule 8D read with section 14A provides for disallowance expenditure even where taxpayer in a particular has not earned any exempt income. But this was negativated by a lot of courts, wherein the view was held by the court that if there is no exempt income, no question of any disallowance under 14A. So now again, the government is telling, the finance bill is telling, the finance minister is telling, the memorandum is telling, such an interpretation is not in line with the intention of the legislature. And they have given a beautiful example here. Just go through the example. During the previous year, assessee earns an expense of 1 lakh. Incurs an expense of 1 lakh, sorry. Assessee incurs an expense of 1 lakh to a non-exempt income of 1.5 lakhs. Okay. And also incurs an expense of 20,000 to an exempt income, which may or may not have been accrued, received during the year. By holding that the provisions of 14A does not apply in this year, as the exempt income was not received or accrued, it amounts to holding that 20,000 would be allowed as deduction against non-exempt income of 1.5 lakh, even though this expense was not incurred wholly and exclusively for the purpose of earning non-exempt income. Such an interpretation defeats the legislative intent of both 14A as well as 37. So now they are telling again, in order to make the intention of legislation clear, to make it free from any misinterpretation, it is now proposed to insert an explanation to 14A of the Act to clarify that notwithstanding anything to the contrary contained in this Act, provisions of this section shall apply and shall be deemed to have always applied. Please see, last year this 43, they inserted an explanation, 43B, 3615A, they inserted same explanation. Shall apply, shall be deemed to have always applied. So they want to end litigation. They want to end litigation. Same things are last year, 43B, 36.5, and that is also prospective in nature. Mind you, already tribunal judgments have come. So this also, what are they telling? Shall apply, shall be deemed to have always applied in a case where exempt income has not accrued or arisen or has not been received during the previous year, relevant to an assessment year, and the expenditure has been incurred during the said previous year in relation to such income. Now, again, they are telling, propose to amend subsection 1 of the said section so as to include a non-obstante clause in respect of other provisions of the Act and provide that no deduction shall be allowed in relation to exempt income, notwithstanding anything to the contrary contained in the Act. So now this law is also made crystal clear. Next amendment on allowability of expenditure under section 37. Exclusively, my dear friends, this is for your Indian Medical Council based on the circular issued by Indian Medical Council. Now doctors are getting a lot of freebies. Lot of freebies are distributed to the doctors by the pharmaceutical or allied health sector industries. And therefore, they are telling not possible because of the circular issued by number 5/2012 dated 1st August 2012, which says that the Indian Medical Council has prohibited the medical practitioner and their professional associations from taking any gift, travel, facility, hospitality, cash, monetary grant from the pharmaceutical and allied health sector industries. Therefore, CBDT clarified that claim of any expense incurred in providing above mentioned or similar benefits, see, it is an expense, so it will be taxed in, it will be disallowed in whose hands? Obviously in the hands of such pharmaceutical or allied health sector industries who has doled out that freebies to the doctors. It will be disallowed in their hands under section 37 of the Act. Now section has come, it has become crystal clear. They say shall be inadmissible under subsection 1 of 37 of the Act, being an expense prohibited by law. So this circular, which was challenged in Himachal Pradesh High Court in view of Confederation of Indian Pharmaceutical Industry, which the High Court has rejected the petition, sir, and in favor of the department. Also, there have been various judgments of the tribunal. Latest judgment in this case, saying that these expenses are not allowable under 37(1) of the Act, is the ITAT Mumbai in McLeod's Pharmaceutical, delivered on 14th October 21 in ITA number 5168 and 5169, Mumbai/2018. In this judgment, ITAT held that the action of the assessing officer in disallowing the expenditure deserves to succeed, and then explained as to why it is a fit case for constitution of a special bench of 3 or more members anyway. So the moral of the story is now, henceforth, it will be disallowed. Therefore, the legal position is now clear that claim of any expense incurred in providing various benefits in violation of provisions of Indian Medical Council, Professional Conduct, Etiquette and Ethics Regulations 2002 shall be inadmissible under subsection 1 of section 37. Now it is an expense prohibited by law. Same thing they are telling. These ITAT decisions allowing such expenditure are clearly not in line with the intention of legislature. And now the department is relying on the decision of McLeod's Pharmaceuticals in ITAT Mumbai. Again, one more amendment is made in 37(1). Please see this. They are telling some taxpayers are seen to be claiming deduction on expenses incurred for a purpose which is an offense under foreign law or for compounding of an offense for violation of a foreign law, claiming that the provisions of explanation 1 to subsection 1 or section 37 applies only to offenses which are prohibited by the domestic law of the country. So they have come to know, the CBDT has seen through this game also, FM has understood this, and now they are telling very good. So it is high time for me to now even amend this law. So here they are telling, I am going to insert another explanation to subsection 1 of 37 to further clarify that expression expenditure incurred by an assessee for any purpose which is an offense or which is prohibited by law under explanation 1 shall include and shall be deemed to have always included the expenditure incurred by an assessee. These are the amendments, my dear friends. For any purpose which is an offense under or which is prohibited by law for time being in force in India or outside of India. Now they have added the words for outside of India. To provide any benefit or perquisite in whatever form to a person, whether or not carrying on a business or exercising a profession, and acceptance of such benefit or perquisite by such person is in violation of any law or rule. Your Indian Medical Council, violation of any law, rule or regulation or guidelines, as the case may be, for the time being in force governing the conduct of such person, or to compound an offense under any law for the time being in force in India or outside of India. So even this, loophole is plugged. Now, 43B. So, 43B is against, the basic mercantile system of accounting that, allowed even on the accrual basis. So 43B is allowed only on payment basis. So there was explanation 3C, 3CA, 3CD, 3D. There are explanation 3C, 3CA, 3D. 243B, it provided that any interest payable on loan or borrowing from a specific financial institution, NBFC, scheduled bank or cooperative society under clause D, clause DA, clause E shall be allowed only if such interest has been actually paid. And it also continued to say, and any interest referred to in these clauses which has been converted into loan or borrowing. Mind the words, my dear friends. Interest on loan, interest referred to in these clauses has been converted into loan or borrowing or advance shall not be deemed to have been actually paid. This was already there. However, certain taxpayers are claiming deduction under 43B on account of conversion of interest payable on an existing loan into a debenture, on the ground that such conversion is a constructive discharge of interest liability and therefore amounted to actual payment, which has in fact been upheld by several courts. So now again they say those two lines, interpretation is against the intent of legislation. This section was, why it was introduced? Introduced to curb the mischief of claiming deduction by assessee without paying interest to financial institution, NBFCs, scheduled bank, cooperative bank. So 43B makes a departure from the sections in the Act as indicated by its non-obstante clause. Under the provisions of this section, conversion of the outstanding interest liability into debenture is not an actual payment. Therefore, you cannot be claimed as a deduction. In other words, the law is now telling, forget your mercantile system of accounting. We will not look at the mercantile system of accounting when the deduction is claimed under this section, that's 43B, as actual payment would have to be made. In view of the above, it is now proposed to amend explanation 3C, 3CA, 3D to provide that, 43B to provide that conversion of interest payable under clause D, clause DA, clause E of 43B henceforth into a debenture or any other instrument by which liability to pay is deferred to a future date shall also not be deemed to have been actually paid. This again one simple amendment there. Consequence for failure to deduct, collect or payment of tax, computation of interest. Now this 201(1)A and 206(c)(7. So here what are the amendments made? Simple amendments are made. They are telling in order to make the intention of the legislature clear and to make it free from any misinterpretation, it is now proposed to amend 201(1)A to provide that where any order is made by the AO for default under subsection 1 of that section, interest shall be paid by the person in accordance with the order made by assessing officer in this regard. Same amendment is made even for TCS 206(c)(7), saying that where any order is passed by the assessing officer for default under subsection 6A, interest shall be paid by the person in accordance with the order made by assessing officer in this regard. Next, now this incentive for newly incorporated manufacturing entities under concessional tax regime. So you know that a concessional regime of 15% was introduced by our government for newly incorporated domestic manufacturing companies, and now because of the pandemic, the last date for commencement of manufacturing or production under 115 BAB is extended by 1 more year from 31st March 23 to 24. Now again, you know that new domestic manufacturing company required to be set up and registered on or after 1st of October 19 and is required to commence manufacturing or production of an article or thing on or before March 23. Because of the pandemic now, it is now extended to 1 more year by March 24. Similarly, your startups now. Your eligible startups, what are they telling? Your that 80IAC was introduced in the statute in the earlier years for all startups. Deduction of amount equal to 100% of profits and gains from an eligible business by an eligible startup for 3 consecutive assessment years out of 10 years, beginning from the year of incorporation, subject to 3 conditions. What were the 3 conditions? Total turnover of the business does not exceed 100 crores. And the startup is holding a certificate of eligible business from the Inter-Ministerial Board of Certification, and it is incorporated on or after 1st day of April 16, but before the 1st day of April 22. So now because of the pandemic, my dear friends, is again extended up to 31st of March 23. Because of the COVID pandemic factor, there is a delay in setting up of such units. Therefore, in order to factor in such delays and promote the eligible startups, it is now proposed to amend the provisions of 80IAC, extend the period of incorporation of eligible startups, up to 31st of March 23. Now, similarly, reduced alternate minimum tax and surcharge for cooperatives. So, this cooperatives, currently cooperative societies, they are required to pay AMT at the rate of 18.5%. However, the companies, they are paying only 15%. So now the government wants to provide a parity, level playing field between both cooperative society and company. Therefore, that alternate minimum tax is now reduced to 15%. Similarly, surcharge on cooperative societies. What was 12% for income between 1 crore and 10 crores is now reduced to 7% only. I repeat again, for between 1 crore to 10 crores, whatever the income of the cooperative society, subjected to 12% surcharge, now reduced to 7%. So now the government is telling this would help in enhancing the income of the cooperative societies and its members who are mostly from rural and farming communities. Again, what are they telling now? This rationalization of surcharge. There are AOPs and there are consortium of AOPs. In AOPs, there are consortium of generally companies. If there are companies, then they have to suffer a greater surcharge up to 37%, which is a lot more than the surcharge on the individual companies. Therefore, accordingly, I propose to cap the surcharge on these AOPs at 15%. Similarly, long-term capital gain on listed equity shares, unit, etc., liable to maximum surcharge of 15%. While other long-term capital gain are subject to a graded surcharge, goes up to 37%. Now again, very welcome amendment. Although it is not here in cooperative society, I'm discussing this amendment here. Proposed to now the surcharge on long-term capital gain has been capped on the unlisted shares. Listed shares, it was 15%. Now even on the unlisted shares, it was 37%. So even on the unlisted shares, it will now capped at only 15%. So this step will give a boost to the startup community along with my proposal on extending tax benefits to manufacturing companies and startups, reaffirms our commitment to Atmanirbhar Bharat. Now, moving on further about IFSC. IFSC is there only in Ahmedabad, gift city of Ahmedabad in India. Modi ji had gone on a tour of Dubai. He studied their IFSC. He did his own research, established here, and IFSC, lot of exemptions and deductions have already been given. They are giving some more deductions now to all the persons who are operating from IFSC, saying that the income of non-resident from offshore derivative instrument, nothing but your P notes, your participatory notes, or over-the-counter derivatives issued by offshore banking unit, income from royalty, interest on account of lease of ship, income received from portfolio management services in IFSC shall now be exempt from tax. Relevant sections are 10 within bracket 4A, 10 within bracket 4F, etc., and 10 within bracket 4G. So all these are now extended to even your IFSC. Next, there is a parity between, now the finance minister is now bringing about parity between employees of state and central government. See the budget speech, para 128 says, finance minister is telling, at present the central government contributes 14% of salary of its employee to the NPS. The central government contributes 14% of salary to NPS. This is allowed as a deduction in computing income of the employee. However, such deduction is allowed only to the extent of 10% of the salary in case of employees of the state government. Now, to provide equal treatment to both the central and state government employees, I propose to increase the tax deduction limit from 10% to 14% on employer's contribution to NPS account of state government employees as well. This would help in enhancing the social security benefits of the state government employees and bring them at par with central government employees. Crystal clear, sir. Now, moving further, tax relief to persons with disability. See, this is the speech of the finance minister. You know 80 DDB. So here the finance minister is telling now, the parent or the guardian of a differently abled person can take an insurance scheme for such person. The parent or the guardian is paying premium, which is claiming as a deduction on the disabled person. So until he is alive, he is telling until you are alive and after your death, only after your death, the disabled person, if he receives the amount, it will be exempt. So sometimes, even in your lifetime, you want amount, the disabled person may need money. Why? Till you are alive, the parent or guardian only will take care of the disabled person. Only after you are no more, whatever amount comes in by form of annuity, etc., that will be exempt in the hands of disabled person. Now, what happens? Suppose the disabled person predeceases the guardian or the parent, or the parent or guardian predeceases the disabled person, then it will be taxed in the hands of the parent or guardian, whatever. But now they are telling, what if in the lifetime of the parent or guardian itself, they want the money. So they are telling, wait, if the parent or guardian is more than 60 years and above, and then you can receive the amount, and I am not going to tax you. So the present law provides for deduction to the parent or guardian only if the lump sum payment or annuity is available to the differently abled person on the death of the subscriber. I told you, till that fellow is alive, parent or guardian, he will take care of the disabled person. So only after his death, the lump sum payment or annuity which is available to the differently abled person on the death of subscriber, parent or guardian. So the deduction was allowed. Now they are telling there could be situations where differently abled dependents may need a payment of annuity or lump sum amount even during the lifetime of their parents or guardians. Therefore, I now propose to thus allow the payment of annuity and lump sum amount to the differently abled dependent during the lifetime of the parents and guardians now. That is on parents, guardians attaining the age of 60 years. Welcome amendment. Moving further. Yes. In order to remove this genuine hardship, proposed to allow the deduction in such section also during the lifetime, that is upon attaining the age of 60 years or more of the individual member of HUF in whose name subscription to the scheme has been made and where payment or deposit has been discontinued. Further, it is proposed that the provisions of subsection 3 shall not apply to the amount received by the dependent before his death by way of annuity or lump sum by application of the condition referred to in the proposed amendment. Now, what about your amount received for medical treatment and on account of death due to COVID-19? So this exemption of amount received for medical treatment and on account of death due to COVID-19. So what has happened? Already one press statement dated 25th June 21 is released by Government of India. Press statement was released. What? Saying that income tax shall not be charged on the amount received by a taxpayer for medical treatment from employer or from any person for treatment of the COVID-19 during financial year 1920 and subsequent years. It was further announced that in order to provide relief to the family members of such taxpayer, income tax exemption shall be provided to ex gratia payment received by family members of a person from employer of such person or from other person on the death of the person on account of COVID-19, same thing during financial year 1920 and subsequent years. It was also stated in the press statement that exemption shall be allowed without any limit when for the amount received from the employer, and the exemption shall be limited to 10 lakhs in aggregate for the amount received from any other person. So whatever was stated in press statement now becomes a law. They want to bring it in the form of a law, in the form of a section. That is all. So same thing is now, they want to now put it in section 17 and clause 2. They are amending that section 17 clause 2 and they are inserting a new subclause in the proviso to state that whatever is there in that press statement, any sum paid by the employer in respect of expenditure actually incurred by employee on his medical treatment or treatment of any member of his family in respect of any illness relating to COVID-19. It may be Delta, it may be Delta variant, it may be Omicron variant, it may be mucormycosis, etc., etc. As may be notified to central government, shall not be forming part of perquisite. Further, they have also amended 56(2) within bracket clause 10, inserted 2 new clauses there. What is that? Any sum of money received by an individual from any person in respect of any expenditure actually incurred by him on his medical treatment or treatment of any member of his family in respect of any illness related to COVID-19, subject to such conditions as may be notified by central government. Similarly, any sum of money, this is there in 56(2)(10), sir, now. Any sum of money received by a family member of the family of a deceased person from the employer of the deceased person without any limit, or from any other person or persons to the extent that such sum or aggregate does not exceed 10 lakh. That is in case of only amount received from any other person other than an employee, where the cause of death is COVID-19, and payment is received within 12 months from the date of death of such person, and subject to such conditions as may be notified by the central government in this behalf, shall not be income of such person. Here I think they're a bit harsh. They have put that limit of 10 lakhs, does not exceed 10 lakhs, and then the 12 months also they have put that limit. So we are, requesting the government. Yesterday I was addressing the, advocates, AIFTP of Hyderabad, and the member of central government of India was also there, the FM, finance ministry cabinet. So I requested them, and all these, whatever, amendments were to be made in this budget also, we went on requesting during the course of our deliberation. So this is one also. This is one deliberation which I requested them to note, that this 12 months figure, what if it's not received within 12 months, what if it's received after 12 months, then unnecessarily it becomes taxable in the hands of the recipient, and I have to pay tax under other sources at the rate specified, and plus this 10 lakhs limit also. Why the 10 lakhs limit and also the 12 months limit anyway. Next, family, this is the same definition, within 10(5) your leave travel exemption, leave travel allowance in 10(5). Now, facilitating the strategic disinvestment of public sector companies. This is a very simple section, 79 provides for carry forward and set off of losses in certain cases. You know that the year in which loss is incurred, year in which loss is set off, 51% of shareholding should be held by the 51% of the voting power should be held by the same persons who beneficially held shares of the company carrying not less than 51% of voting power on the last day or of the year in which the loss was incurred and which the loss is set off. Now that exception because of the Air India, Indian Airlines, etc. Last 14 years, my dear friend, every day the government is paying 20 crores to Indian Airlines. It is not the job of the government to do business. Job of the government is to provide good roads, infrastructure, water, electricity, jobs, employment, etc. It is not the government's priority or not the government to do business. And last 14 years, they have been doing business. They fed the Indian Airlines round about 7,000 to 7,500 crores per annum has gone to your Indian Airlines, and it is round about 84,000 crore of taxpayers' money. Round about 7,000 to 7,500 crore per annum last 14 years. So 84,000 crores have gone away, and have bit the dust. Taxpayers' hard-earned money, it is gone to, dust, and money is spent on the Indian Airlines, 20 crores per day. So what a beautiful now, this disinvestment is done. Lovely scheme is done, and wait for the IPO, which will be coming of LIC IPO now in the next month. Anyway, this strategic disinvestment of public sector company now it has gone back to their original father who gave birth to them. It now proposed to amend 79 of the Act to provide that the provisions of subsection 1 of section 79 shall not apply to an erstwhile public sector company, subject to the condition that the ultimate holding company of such erstwhile public sector company immediately after the completion of the strategic disinvestment continues to hold directly or through its subsidiary or subsidiaries at least 51% of the voting power of the erstwhile public sector company in aggregate. No problem. Again, also it is further proposed to provide that if the above condition is not complied with in any previous year, after the completion of strategic disinvestment, provisions of subsection 1 shall apply for such previous years and subsequent previous years. Fair enough. Now, widening and deepening of tax base. This as per the finance minister, this as per the memorandum I am going, sir. Now, rationalization of provisions of 206 AB and CCA to widen and deepen tax base. This is, you know that specified person. Last year when it was introduced, defined to mean a person who has not filed the returns for 2 assessment years. Relevant to 2 previous years, immediately preceding the financial year in which tax is required to be deducted or collected, for which the time limit for filing return of income under 139(1) has expired, and the aggregate of tax deducted at source and tax collected at source is 50,000 or more in each of these 2 previous years. So government has provided online utility to taxpayers to check whether the person is specified person or not. You put the PAN, you will come to know whether this fellow has filed a return for 1 year or 2 years. So now they are telling, in order to ensure all persons in whose case significant amount of tax has been deducted to furnish the return, it is now proposed to reduce the 2 years requirement to only 1 year. Henceforth, to 2 years requirement reduced to 1 year by amending the provisions of 206AB and 206CCA TDS and TCS to provide that specified person to mean a person who has not filed its return of income for the assessment year relevant to the previous year immediately preceding the financial year in which tax is to be deducted or collected as the case may be, and the amount of tax collected and deducted at source is 50,000 or more in the said previous year. Now, TDS on sale of immovable property. So what was happening? 194 IA, it provides for deduction of tax on payment on transfer of immovable property other than agricultural land beyond a sum of rupees 50 lakhs. So here, what are they telling now? This section did not take into account the stamp duty value of the immovable property. So now they are telling you, please take the transfer, amount of transfer, and compare with the stamp duty value on the date of receipt of consideration. So compare the consideration, compare the stamp duty value, whichever is high, on that you deduct 1%. So with this stroke of pen, with this one amendment, government has now factored in 43C and 50C. So that 1% I need not deduct on the consideration, or I need not deduct on the stamp duty, but I have to deduct on whichever is higher. Compare the consideration, compare the stamp duty value, and then you please deduct that 1% as the case may be. But here they have forgotten, my dear friend, that 110% of actual sale consideration. For example, 60 lakhs, 110% is 64 lakhs. So 64 lakhs, that 110%, the 60 versus 64 lakhs, actual receipt is only 60 lakhs. So that 64 lakhs, 110. So 1% will be deducted. They will take that 60 lakhs on that, compare it with the consideration and the stamp duty value. But here what happens, that 110%, that 10% allowed to me. Anyway, that is a, that is fact is not considered, and we are requesting the government to consider that. But now, for now, what you have to see, consideration versus the stamp duty guideline value, whichever is higher, please deduct 1%. So now that 43CA and 50C is also taken into account. Who wanted 1%, sir? The government did not want to collect your 1% TDS. They wanted, it will leave an audit trail. They want to catch the people, who sell the properties or immovable properties, etc. So that the respective capital gain tax is paid under 50C, or the tax is paid for the business income under 43CA. For that 1% was, it leaves a trail. They don't want to collect that 1% TDS. Anyhow. Now about this rationalizing TDS provisions. So here madam is telling, it has been noticed that as a business promotion strategy, there is a tendency on the businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transactions, I now propose to provide for a tax deduction by the person giving benefits if the aggregate value of such benefits exceeds 20,000 during the previous year. 28(4). So any benefit or perquisite of a business or a profession, 28(4) will be applicable. Value of any benefit or perquisite, whether convertible into money or not, arising from the business or exercise of profession, is to be charged as business income in the hands of recipient of such perquisite or benefit. However, in many cases, such recipient does not report the receipt of benefits in the return, leading to furnishing of inaccurate particulars of income. So therefore, now they are inserting a new TDS provisions of 194R to provide that any person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from carrying out of a business or exercising of a profession by such resident, shall, before providing such benefit or perquisite to such resident, it's only to resident, ensure that the tax has been deducted in respect of such benefit or perquisite at the rate of 10% of the value or aggregate of value of such benefit or perquisite beyond rupees 20,000. Now they are telling what happens where the benefit or perquisite in case may be wholly in kind or partly in cash or partly in kind, but the part in cash is not sufficient to meet the liability of the deduction of tax in respect of the whole of such benefit or perquisite. The person responsible for providing such benefit of the perquisite shall, before releasing the benefit or perquisite, ensure that the tax has been paid in respect of that benefit or perquisite. Limit is 20,000 rupees. Now, provisions will not apply to an individual or HUF whose total sales, gross receipt turnover does not exceed 1 crore as usual in the case of business or 50 lakhs in the case of profession during the financial year, immediately preceding the financial year in which benefit or perquisite is provided. This one, one other amendment in case of cinematograph films or persons, producers of cinematograph films or persons engaged in specified activities. Scope is widened under 285B to include persons engaged in specified activities to expand reporting requirements in Form 52A. The specified activities would mean event management, documentary production, production of programs for telecasting on television or over-the-top platforms or any other similar platform, sports event management, other performing arts or any other activity as the central government may by notification specify. Now about your bonus stripping and dividend stripping, they are now made applicable to even securities and units. 94(8) current provisions, they do not apply to bonus stripping undertaken in respect of securities. It also does not apply to your REITs and InvITs, that is your infrastructure investment trust or real estate investment trust or even AIFs, alternative investment funds, as the definition of the term unit has not been modified subsequent to introduction of all these provisions relating to REITs, InvITs, units, etc. Again, current provisions of 94(7), that is provisions pertaining to dividend stripping, are not applicable to the units of new pooled investment vehicles such as InvITs or REITs or AIFs. Therefore, they are telling, I want to make an amendment in 94(8) saying that the bonus stripping will also be applicable to securities as well. Very simple. And then they are telling, I will amend one explanation also to the said section to modify the definition of unit. Now in that unit, I will also include unit of business trust such as InvIT, REITs and also AIF within the definition of units. Now about the virtual digital assets. Now, the finance minister is not bothered whether this is legalized, not legalized. That is not our job, they say. It is not our job. Today, my dear friends, India has the highest number of crypto owners in this country. So be very careful now. All the crypto owners, beware. Now you have to pay tax. Scheme for taxation of virtual digital assets. You are advising the government on this fact. And that's what we advise, that you please collect the tax. So they are not bothered whether it is illegal, whether it is not legal. That is the job of some other agency. We don't know. In fact, for this cryptocurrency, one other act, if, they wanted to make an amendment for 10 years jail for the owner of crypto. Anyway, that is a different story altogether. Here they are telling, finance minister saying, I am only worried about the tax collection. So India has got the highest number of crypto owners in this world. Henceforth, now I'm going to collect tax on the virtual digital asset called as VDA. So what is the section? 115BBH is now introduced, my dear friends. New section in the act saying that any assessee, income of any assessee, where you have income from transfer of any virtual digital asset. How to calculate income tax? On the income of the transfer of any virtual digital asset at the rate of 30%. No deduction will be allowed. No deduction in respect of any expenditure will be allowed. No allowance allowed. No set off of any loss allowed. Even no set off of any loss arising from transfer of virtual digital asset shall be allowed against income of any income computed under this act. And such loss shall not be allowed to be carried forward to subsequent assessment years. It is a dead loss. What is allowed then? Only cost of acquisition. What is the rate of tax? 30%. Under which head? Income from other sources. Law is crystal clear. Don't complicate. Don't get confounded. Don't complicate the law. Make the law workable. Virtual digital asset. Yes, sir. Amount received on transfer of virtual digital asset. Yes, sir. 30% rate of tax. Deduction. Sir, no deduction respect of any expenditure. No allowance. No set off of any loss. Under any other provision. and no set off of any loss arising from the transfer of VDA also shall be allowed against any income computed under any other provision of the Act, and such loss also shall not be allowed to be carried forward to the subsequent assessment years. Similarly, TDS. You are transferring virtual digital asset? Yes, sir. 194S is introduced, sir, to provide deduction of tax on a payment for transfer of virtual digital asset to a resident. Don't tell me all these things, where is that virtual digital currency? Is it in India? Income accrued or arising in India? You have in this phone, you are sitting and you are doing this virtual digital asset. And what are they selling? That's why payment to a resident of India. That's all. They say payment to resident. Now, all those issues will be there. Don't worry. Here you want to sit. You are sitting in the bathroom. You are sitting with the phone and happily you are doing this. These bitcoins. Oh, this is, I am selling this. I am buying this. And you don't want to pay any tax. It is not done, sir. And you cannot tell. You are sitting in your house only. You are sitting in India. We are telling, yes, sir. We may argue. That is a different matter altogether. As of now, what are they telling? Any payment for transfer of virtual digital asset to a resident at the rate of 1% per annum. Again, see 1%. They don't want that 1% again, sir. They only want to track. They want an audit trail. Anyway, to insert 194S to the Act to provide for deduction of tax at source. However, in case the payment for such transfer is wholly in kind in exchange for another virtual digital asset, or part in cash, part in kind, but part in cash is not sufficient to meet the liability of deduction of tax in respect of whole such transfer, the person before making the payment shall ensure that the tax has been paid in respect of such consideration. Again, provisions of 203A and 206AB, your TDS and TCS PAN numbers not applicable. Don't worry, they are telling in case of specified persons, provisions of 203A, 206AB, etc. will not be applicable. Further, no tax is to be deducted in case the payer is a specified person and the value of such consideration to a resident is less than 50,000 during the financial year. If the specified person, I will tell you who is a specified person. In any other case, the said limit is proposed to be 10,000 rupees. Then they say if the tax has been deducted under 194, yes, no tax is to be collected or deducted in respect of the said transaction under any other provisions of chapter 17 of the Act. Fair enough. Again, that suspense account word is used in all the TDS provisions. So any sum paid for transfer of virtual digital asset is credited to any account, whether called suspense account or by any other name in the books of accounts of the person liable to pay such sum. Such credit of the sum shall be deemed to be the credit of such sum to the account of the payee, and provisions of 194S shall apply accordingly. Board is empowered to issue guidelines with prior approval of central government to remove any difficulty arising in giving effect to provisions of the said section, and sooner or later it will be notified, don't worry. And it's also telling the e-commerce transaction 194O, where the transaction where tax is deductible under section 194O along with 194S, then tax shall be deducted under 194S only and not under 194O. So who is a specified person? Same thing, sir. Specified person means an individual or HUF. Total sales, gross receipt, turnover from business or profession less than 1 crore or less than 50 lakhs. And again, being an individual or HUF having income on that profits and gains of business or profession means a person. In case of profession during financial year, immediately preceding the financial in which such the virtual digital asset is transferred. Anyhow. Next, gifting of virtual digital asset. So further, in order to provide for taxing the gifting of virtual digital asset, it is also proposed to amend explanation to clause 10 of subsection 2 of section 56 to inter alia provide that expression property. Now that property, virtual digital asset has also become property, my dear friends. So give a gift, related persons, absolutely no problem. It will be exempt. And to relate to other than relatives, it is taxable in the hands of recipient at the slab rates. Now, what is the definition of virtual digital asset? New section is introduced, sir, 47A in clause 2. So 2 within bracket 47A. So 2 within 47A is proposed to be inserted in section 2. It is proposed to mean any information or code or number or token not being Indian currency or foreign currency generated through cryptographic means or otherwise by whatever name called, providing a digital representation of value which is exchanged with or without consideration with the promise or representation of having inherent value or functions as a store of value or as a unit of account and includes its use in any financial transaction or investment, but not limited to investment schemes, and can be transferred, stored, or traded electronically. See this: transferred, stored, or traded electronically. Non-fungible token and any other token of similar nature are also included in the said definition. Non-fungible tokens means such digital assets as notified by the central government. Central government will also notify any other virtual digital asset as virtual digital asset by way of notification in the official gazette. Further, the government will also notify such asset which shall not be considered as virtual digital asset for the purpose of proposed section. Don't worry, notification will be out sooner or later. Now next, withdrawal of concessional rate of taxation on dividend income under 115 BBD. So you know that Finance Act 2020 abolished the DDT provided in 115(o) to inter alia provide that the dividend shall be taxed in hands of now shareholder at applicable rates plus surcharge and cess. So 115 BBD Act provides for concession rate of tax of 15% on dividend income received by an Indian company from a foreign company in which the Indian company holds 26% or more in nominal value of equity shares. So this rate was aligned to the rate of tax provided in 115(o). Now that 115(o) is abolished, and now they want to bring parity in the tax treatment in the case of dividend received by Indian companies from specified foreign companies vis-a-vis dividend received from domestic companies. It is now proposed to amend section 115 BBD of the Act to provide that the provisions of this section shall not apply to any assessment year beginning on or after 1st day of April 23. Now phasing out exceptions, you know, this government since 2014, slowly they are phasing out all the exemptions and all the deductions. Similarly here, they are phasing out all this 10(8), 10(8)A, 10(8)B, 10(9), etc. That is providing for exemption to the income of any foreign individual, foreign citizen assigned duties in India in connection with any cooperative technical assistance programs, projects, etc., which are in accordance with an agreement entered with the central government and government of the foreign state. So all these have now been phased out and removed. Why? The exemptions as provided under the above mentioned clauses have outlived their utility in the era of simplification of tax laws, and where exemptions and tax incentives are being phased out as a matter of stated policy of the government. Further, if under a tax treaty, India gets a right to tax a particular income and other countries expected to then relieve the double taxation by exemption or credit method, providing exemption by India amounts to surrender of right of taxation by India in favor of the other country. Anyway, so this is another welcome amendment, section 248. So what was 248? 248 is now removed and now new section is inserted, that is 239A. So what is 248? So 248, it provided in a case where under an agreement or arrangement, person has deducted tax on any income paid by a non-resident other than interest. Under section 195 of the Act, he may appeal to the Commissioner of Appeals for a declaration that no tax was deductible on such income. But when? Only after having deducted and having remitted the tax, then he can approach the Honorable Commissioner of Appeals for a declaration that no tax was deductible on such income. Then such appeal can be filed after making payment of tax. I told you, only after making payment of the tax so deducted to the credit of central government, and the appeal should be filed within 30 days of payment of such tax to the government. Now they are telling to obtain a refund of tax deducted and paid by the person which was not deductible as per the provisions of 248, taxpayer has no recourse to approach the assessing officer. Why you want to go to directly CIT appeals? They are telling you come to assessing officer now. So they are removing CIT appeals. Now you deduct, remit tax and tell that no, I was not deductible. I was not actually, the tax was not deductible in my case. Therefore, please give me refund. So I will file the declaration with now assessing officer instead of CIT appeals. Then the assessing officer will pass an order. Either he may issue the refund or he may decline the refund. If he declines to issue the refund and if he passes an order to that effect, anyhow, the assessee can file an appeal with the CIT appeals under section 246A of the Act within 30 days of receipt of order by the assessing officer rejecting or declining to issue the refund. So now 239A, I told you, is inserted in the Act to provide that such a person who has made a deduction of tax under such an agreement or arrangement and borne the tax liability when no tax deduction was required may file an application for refund of such tax deducted before the assessing officer. Now, cash credit under section 68. I would not like to go in detail, but all of you know what is cash credit. So now, my dear friend, remember the magic word source of source. It was applicable from whom earlier, madam? It was applicable for whom? Only in the case of a company. Finance Act 2012, it was provided that nature and source of any sum in the nature of share application money, share capital, share premium, or any other amount by whatever name called, credited in the books of a company in which public is not substantially interested, that is a closely held company, will be treated as explained only if the source of funds is also explained in the hands of shareholder. However, in the case of your loan or borrowing, in a case of others, loan or borrowing, judicial decisions, what are they telling? Only identity, creditworthiness, genuineness of creditors, of transactions. You please explain for the crediting books of accounts. That is sufficient for me. Onus does not extend to explaining source of funds in the hands of creditor. Now, goodbye. They are telling bit goodbye to the provision. I want to explain. I want an explanation on the source of source in the hands of creditors. Please see this. See the words used in the memorandum. There is a pernicious practice of conversion of unaccounted money by crediting it to the books of the assessees through a masquerade of loan or borrowing. So they know, they are telling you loan or borrowing. Very good, sir. You are using the word loan, borrowing, liability. That means loan I can take from bank. I can take from financial institution. I can take from NBFC. I can take from other creditors also. So they are telling all that loan, borrowing, liability. Please explain source of source now. Forget it. Company. Anyway, it was already there in share application money, share premium, share capital, company in the hands of shareholder, source of funds, etc., etc. Now, even in the hands of the words used are loan or borrowing or liability. So they are telling, give me the source of source. If you cannot give the source of source, section 68 read with 115 BBE, 60% rate of tax, 25% surcharge, 25% of 60, 15, 60 plus 15, 75. 10% penalty is on tax. 60 is the tax. 10% of 60 is 6. 6 plus 75. 81%. So this is what we are now. So 60% tax, 15% surcharge, 6% penalty, 81% rate of tax. In case of a search, it goes 30% more, 107%. So 77, you're 78%, 80%, and 107%. So be careful, my dear friends. The finance minister has now come to know this is a pernicious practice of conversion of unaccounted money by crediting into the books of assessee through a masquerade of loan or borrowing. What to do? Make the payment. In this year itself, you make the payment. Before March, make all the payment of such loans. Else prove the source of source. Else you have to prove the source of source. Next year when 143(2) is issued and when your case is taken up for a hearing, in case they ask confirmation of loan creditors, don't think it is only confirmation of loan creditors. Oh, I'll submit, my confirmation of account, beautiful name, address, PAN. I'll give my bank statement. It has come in my bank. I'll give you the address of the creditor. 133(6). You know what is happening now? Faceless assessments. They are issuing 133(6) to the creditor. They are asking for all the details. Plus, they are issuing, notice to the assessee also. They are asking you, please prove the identity, creditworthiness, genuineness by asking first. You know what is the first point they are asking? Please prove that the signature on the confirmation letter is your signature. That is a creditor signature. How do you prove that is the signature of the creditor? Please see how tough the faceless assessments have become. They are telling you prove that. Anyway, you are asking me to prove the identity, creditworthiness, genuineness, etc. I will give confirmation letter. I will give my ledger extract. I will give my bank statement. I will give the ledger extract of my account in the books of the creditor. I will give the bank statement of the creditor. I will give the ITRV of the creditor. I will give PAN of the creditor. I will give Aadhaar of the creditor. Now they are asking source of source. They will call for his returns. They will call for his bank statement. They will prove source of source. If you cannot prove, addition to be made under 68 in the hands of the assessee and suffer 115 BB. Anyway, so this is one more amendment we have gone through. Coming, sir, next, we'll move forward. Now, this is another, small amendment is made here. 78 and 278AA are related to punishment with prosecution against persons for failure to pay tax to the credit of central government, chapter 17B for tax deducted at source. But provisions for offense with respect to TCS, similar provisions were not there for punishment with prosecution against persons failing to pay TCS was not there under section 278A and 278AA. So therefore 276BB and it is proposed to include 276BB under 278A and 278AA owing to similar nature of offences that are punishable under section 276B and 276BB. Now faceless assessment under the Act. So gradually, they want to make everything faceless. India is the first country in the world, let me tell you, who has implemented scheme of faceless assessment, faceless penalty, faceless appeals, and now faceless tribunal. So now they want to make, faceless determination of arm's length price 92CA, faceless DRP, dispute resolution panel 144C, faceless appeal to appellate tribunal 253, faceless procedure of appellate tribunal 255, etc. So the date of limitation, was March 22. Now, because of the pandemic, and they want to extend it the further for issuing directions. Slowly they want to issue directions and they want to make it faceless by March 24. So they have, extended the date for issuing directions for the purpose of these sections till 31st of March 2024. Now that appellate, you also know, very good amendments have been made. Now they are telling whoever asks for video conferencing, I will give you. I will give you, sir. You video conference, I will give you. Again, that CIT appeals order cannot be reviewed, faceless assessment. SOPs have now been issued to all the commissioner appeals. Very good. They are telling we will not review your order. Again, wherever faceless, you're asking for your video conferencing, we will allow. Anyway, so it is going to improve by the day. Don't worry. Next. So this 144B now has been fully substituted, my dear friends. 144B. What was 144B? What are they telling? 144B, that faceless assessment section is fully revamped and streamlined. Why? Because of plethora of judgment. See how fast the government is. Last year we filed a lot of writ petitions based on 144B subsection 9. Principles of natural justice violated, etc. Not followed the procedure. Now immediately the government, they have abolished, they have removed, they have deleted 144(9) and that 144B has been again, redrafted, substituted again. Immediately they have done that and streamlined in order to address various legal procedural problems being faced in implementation of the said section. Now it is proposed to substitute 144B so as to provide A to Z. Remember all the alphabets. There are 26 clauses. A to Z is there, my dear friends. So beautifully they have taken it down. CZ, everything they have taken into account. And they have made it more user friendly. Anyway, so we move further. Now what about this? 79A is introduced in the statute. So 79A is introduced in the statute. What is this? The finance minister is telling you are all become very clever. You were clever. There is a search. There is a survey. You declare income. You declare undisclosed income offered in the course of search or survey. Against that, you are claiming brought forward losses. You want to claim brought forward losses and you want to pay tax after reducing that brought forward losses. Income is declared in the course of search and survey. It is not a regular income. From henceforth, kindly do not set off the brought forward losses. Rather, you are not allowed to set off the brought forward losses against the income declared in the course of search or survey. Please carry forward for set off against the regular income to be earned in the next years from regular sources, from your regular businesses, not from the undisclosed income declared in the course of search and survey. Henceforth, they are telling no question of setting off the brought forward losses against the income from declared in the course of search or survey. So for that, new provision is introduced, 79 capital A. Next. Move on further. Now this provision is relating to assessment and reassessment. Yes, sir. Last year itself you did the amendment 148, 149, 151 and you introduced new section 148A. You are not even allowed them to be tested before the courts of law. Last year you revamped the entire provisions of 148 and now you have immediately changed again. Immediately they say I am going to make amendments. See how fast the government is now. That the old provisions, what was there earlier, were totally revamped, altered, substituted, amended. New section 148 was introduced. So now what they did this year, they made further amendments, but it is retrospective effect from last year. So now these provisions are not even tested before the courts and immediately they have made amendments. Anyway, so what are the amendments they are telling now? First, whatever they are telling, insert a new proviso to the effect that requirement for approval to issue notice under 148 shall not be required to be taken by the AO if he has passed an order on 148AD with a prior approval in that case stating that the income is escaping assessment. So I don't want, see, there was at least 5 to 6 approvals. They are telling not required. When you pass 148A clause D order, what is 148A clause D? It's a very beautiful provision, sir. Most welcome amendment. They are telling don't issue 148 directly. First, issue show cause notice. Give opportunity to the assessee. Please tell him, have you got any undisclosed income? You please explain to me that you have not got undisclosed income. You are able to explain to me. You are able to satisfy that there is no undisclosed income. Then I will drop the proceedings. I will not issue notice on 148. Even to issue notice on 148, that is why 148 capital A was introduced based on the dictum of Supreme Court in GK and Tribes Act. I will myself give you reasons recorded. You don't ask me. I will myself give you a copy of satisfaction recorded by the Principal Commissioner of Income Tax. I will give you the reasons recorded. Go through the reasons recorded. You please prove that there is no income which has escaped assessment. There is no concealed income. I will drop the proceedings. I will pass an order on 148AD. Either I may reopen or either I may not reopen. So they are telling 148AD anyhow I have passed. So now, suppose it's a fit case for assessment, then he is telling, don't worry, I will not now again ask for approval for issue of notice under 148. I will straight away issue a notice under 148. Fair enough. Next, then some inadvertent, they are telling to correct inadvertent drafting errors. See how fast they are learning. Yes, we agree there is a drafting error in the act. They are telling, yes, I am agreeing. Memorandum says, memorandum is telling to correct inadvertent drafting error, align the provisions with the intent of the section. Now I am making following amendments. 148 omit the word flagged, that information flagged. They removed that word flagged now from information. They removed that word flagged. Again, in explanation 2 to 148, omit the reference of 133A5. What is 133A5? Your event, marriage, ceremony, etc. There are 2 types of survey. You know that 133A2, your TDS survey, 133A5, your event, ceremony, your etc. Marriage survey, etc. So they removed that section. Again, 3 years they have removed, sir. Earlier, what they did, sir? Earlier, it was 4 years, up to 4 years, beyond 4 years, up to 6 years, beyond 6 years, up to 15 years in case of a resident in India having any asset abroad, which they reduced last year to only 3 years. That 6 years reduced to 3 years and 10 years. Beyond 3 years, up to 10 years. So now they are telling, I am removing that reference to 3 years now. So therefore, I will go up to 10 years. Beyond 3, I will go up to 7 years. Beyond, I will go 7 years more. Beyond 3 years, no problem. Now they are telling, now, no search, the provisions of 132, etc., nothing contained 150, 153B, by inserting 4 to provide that nothing contained in such section shall apply to any search initiated on 132 or requisition made under on after 1st day of April 21. Yes, because that 153 ABC is deleted in the statute now. Fair enough. Now, what is there, sir? For even search, only this reassessment provisions will apply. 153 ABC is no more there in the statute. So that amendment is made, no problem. Again, what they have made? This meaning of information, they have changed now. What is the meaning of information? They have changed that. See the meaning of information now. I will just show you. Yeah. So they are telling, clarify what constitutes information under explanation 1 to 148. Earlier, what was it, sir? Objection from CAG, Comptroller and Auditor General of India. Objection from CAG. Now they are telling any audit objection. How beautifully they have changed. They are telling, forget it. No CAG, remove that CAG, add the word any audit objection, matters. So your assessment order is passed. What do you mean by audit objection? Order should be passed. It may be under 143.3, it may be an ex parte assessment 144, it may be a income escaping assessment order 147, etc., etc. So they are telling any order, any audit objection, any of the order, it will become information for the purpose of reopening. See how dangerous it is now. Extraordinary powers given to the revenue. So any audit objection, along with that, they have added some more words in the meaning of information. So first, word flagged removed. Second, objection of CAG, audit objection by CAG, word CAG removed. They say any audit objection, any A and Y is included. Again, information received from a foreign jurisdiction under an agreement or direction contained in a court order. So that also becomes information. Or information received under a scheme notified under 135A. What is 135A? Your 133.6, etc. notices are issued. Based on that, they collect a lot of information. Based on that information, they are going to reopen the cases now. By virtue of 135A. Anyway, So this is the meaning of the word information. And you know that asset, earlier what was it, sir? Earlier again, beyond 3 years up to 10 years, when can you reopen the case? If there is a undisclosed income, and that undisclosed income is in form of an asset, and the meaning of asset was given, only asset. Now they are telling, no, I am going to now increase that, I am going to increase the scope. What are they telling now? Please see, in the form of an asset, or they are increasing now beyond 3 years up to 10 years. Earlier I told you, in the form of an asset or expenditure in respect of a transaction or in relation to an event or occasion. Your daughter was married. You spent 25 lakhs, example, in a hotel, or you took everybody to Switzerland. You took all your friends to Switzerland, etc. They got the information now. Expenditure in respect of a transaction or in relation to an event or occasion, or in an entry or entries in the books of account. Everything is tabbed, sir, now. Asset, expenditure, now entry, they say. Everything becomes an entry, sir. Your debit or credit or your journal entry, everything is an entry. Entry or entries in the books of account. So, where the assessing officer has in his possession books of account or other documents or evidence which reveal that the income chargeable to tax represented in the form of asset. Earlier, you know, that asset includes your 5-6 assets only were there. Shares, you know, properties, immovable properties, etc., was there last year. Now nothing. They are going further. Enhanced scope, increased scope. Asset, expenditure in respect of a transaction. Please understand, respect of a transaction. You are doomed. Or in relation to an event or occasion. An entry or entries in books of account. Earlier, because asset was there, 43B, you can't reopen. 40IA, you can't reopen. 50C, you can't reopen. 43C, you can't reopen. I'm telling you, any entries, 40IA. Now they are telling entry, asset, entries in the books of account, expenditure in respect of transaction, everything will be reopened, sir, now. But which has escaped assessment, amounts or likely amount of 50 lakh rupees or more. Sir, search cases, 50 lakh rupees. What is this? It's a very small sum, 50 lakh rupees in case of a search. So anyway, they can go beyond 3 years now and up to 10 years. And the definition of undisclosed income in relation to asset has been enhanced, widened to include entry, any entries or expenditure in relation to an event or occasion, etc. Anyhow. Yes, insert a new subsection 1A in 149 to provide that notwithstanding anything contained in subsection 1 of the said section where the income chargeable to tax represented in the form of asset or expenditure in relation to an event or occasion of the value escaped assessment, investment in such asset or expenditure in relation to such event or occasion has made on income more than one previous year, relevant to assessment year within the period referred to, etc. 148 shall be issued for every such assessment year. Anyhow. So moving further, 271 A, B, A, C, A, D, etc., which was earlier only, you know, could be levied by assessing officer, can now also be levied by the commissioner appeals. They have enabled the commissioner appeals also to levy penalty under these sections along with the assessing officer. 272A of the Act, you know, what is that penalty? 100 rupees per day of default for, you know, failure to answer questions, sign statements, furnish information, some returns or statements or allow inspection, etc., etc. 100 rupees per day of default. CAG is telling, sir, this is there since 1999 and does not have deterrence at all. 100 rupees. So please increase to at least 500 rupees per day. So now they are telling it is 500 rupees per day. Even if they catch you with mask, earlier it was 1000 rupees, 500 rupees. Now 250 rupees without mask. So this 272A now telling 100 rupees, it is 500 rupees per day till such time the default continues. Anyway, this 197, 179 of the Act. This is, you know, see how minutely they have studied the law. The hats off to the finance minister and their team. There is no amendment required in this section, sir. What is the amendment, you know? They are telling the title of this section. What is the title of this section? Title of the section is 179. What is the 179 of the Act? I will recover tax due from a private limited company from its directors when tax cannot be recovered from the private company itself. So therefore, you know, the directors of the private limited company are jointly and severally liable for payment of such tax and with certain conditions. However, the title of the section inadvertently refers to liability of directors of private company in liquidation. Is it in liquidation? No. All these years, liability of directors of private company in liquidation. So only thing is title is changed now. The liability of directors of private company under this section is not conditional upon the company being in liquidation. And the section makes no reference to liquidation. Therefore, to make the title of the section uniform with its provisions, it is now proposed to amend the title of the section to liability of directors of a private company come to charitable trust and institutions. Since 2014, sir, when the India government has come to power, every year there is some or the other amendment with respect to charitable trust and institution. This time, they have done some very wonderful amendments with taken great pains. More than 20 pages is dedicated in the memorandum to the amendment made in charitable trust. More than 2 hours would be required only for a session on charitable trust. In any case, we will try to complete all the amendments. Now they are telling books of accounts. They are telling first regime 1, regime 2. How beautifully memorandum they are explaining. They are telling there are 2 types of charitable trust or institutions who are claiming exemptions. Regime 1 is your 1023C. Under regime 2 is your 12A, 12AB, etc. These 2 types, exemptions to these trust or institutions available under 2 regime. First regime is your 1023C. Second regime is your 12AA or 12AB. Okay. Now, what they want to do? They want to bring amendment for ensuring their effective monitoring implementation, bringing consistency in provisions of 2 exemption regime, and providing clarity on taxation in certain, circumstances. First circumstance, what are they telling? Effective monitoring, etc. Books of accounts to be maintained by the trust or institution under both regime. So under the second regime, meaning to say your 12A, when you have to maintain books, sir, you have to consider the gross receipts. You have to consider the receipts without giving effect to provisions of 11 and 12. And if it exceeds maximum amount not chargeable to tax, then you are required to get books of accounts audited. Similarly, this provision is also there in the first regime, that is your 1023C, in the 10th proviso of 1023C. However, there is no specific provision in the Act providing for the books of accounts to be maintained by such trust or institutions. So now they are telling, I am now going to amend clause B of 12A1 and 10th proviso to 1023C to provide that where the total income of the trust or institution under both the regimes, without giving effect to provisions of 1023C or 12A or 1011 or 12, etc., exceeds the maximum amount not chargeable to tax, such trust or institution shall keep and maintain books of accounts and other documents in such form and manner at such place as will be prescribed. Wait, it will be prescribed. Such form, such manner, such place as may be prescribed. Next, penalty for passing on unreasonable benefits to a trustee or specified persons. So, under section 13, the second regime, trust or institution under the second regime, that is your 12A, 12AB, etc., are required not to pass on unreasonable benefit to the trustee or any other specified person. Now they have introduced 271 AAE. Listen carefully. 271 AAE is introduced, saying that penalty will be levied on the trust or institution under both the regimes, regime 1, regime 2, on those trust or institution which is equal to the amount of the income applied by such trust or institution for the benefit of specified person. Where the violation is noticed for the first time during the previous year, 100% penalty. And twice the amount, 200% penalty of such income where the violation is in notice again in subsequent year. So you notice the violation, you continue to do the violation. Second violation is at 200% penalty. So 1 lakh rupees unreasonable benefit passed on to the trustee or his family members or his wife or to the manager or to the employee of the trustee, etc., etc. 1 lakh will be the penalty. Next time you give 10 lakhs, second violation, they are telling pay 10 lakhs penalty. And also they are telling proposed section 6 to operate without prejudice to any other provision of chapter 21. If any penalty is leviable under any other provisions of this chapter, in addition to the proposed penalty, that penalty would also be applicable. Be careful. Because of want of time, we are not able to go into detail. Quickly move on to the other, amendments. What are the other amendments? They are telling application now. What do you mean by application? They are telling nothing doing. Henceforth, application means what? It is only payment on payment basis application. Sir, your receipts you are telling on accrual basis, but my application you are telling I will allow only on payment basis. How far that is justifiable, I don't know. But anyway, it's somewhat become like a hybrid system of accounting. Your receipts will be on mercantile basis. However, when an application, that 85% of application, etc., or if you are not able to apply 85%, then you accumulate 11.2, read with 11.5 in the modes, form 10, etc. Within 5 years, you have to spend, etc. Now they are telling nothing doing. Application means payment. Very good, sir. This amendment is made. So henceforth application means only payment. Again, one more amendment is made. That 5 years, whatever you are accumulating, what you used to do, sir? Either spending 5 years or tax at the end of in the 6th year. Now they are telling nothing here, nothing doing. Have you spent or not? Not able to spend by 5 year, tax in that 5th year itself. I am not going to wait for you. Accumulated income earlier, what? If not spent within 5 years, it was taxed in the 6th year. They are telling nothing doing. I will tax it in the last year itself now. Same shall be taxed in the 5th year itself. And all these provisions, you know what they have done? Ditto provision in 1023C, sir. 12A, same provision, ditto provisions they have made in 1023C. They are bringing parity now. They are bringing level playing field. Anyway. So moving further. Last minute or so, I think I am, exceeding my time. 115 TD, that chapter 115 TD was introduced, that is accredited income. Chapter 12 EB was introduced by Finance Act 2016. Taxation of accredited income of trust in certain cases. What happens, when a charitable trust, it may voluntarily wind up its activities, or it may dissolve, or it may merge with any other charitable or non-charitable institution. It may no more do charity. That means to say, it becomes a commercial organization. It will convert into a non-charitable organization. That means what was it, sir? Accredited income. What is accredited income? Fair market value of assets minus fair market value of liabilities. On that you have to pay MMR. Lot of trusts are there, sir, established in 40s, 50s, 60s. They are holding crores of rupees worth property. Those days they would have got without, they would have got as donation or purchased at peanuts. Today the properties will be in several crores of rupees. So now they are telling, in case you convert, my dear friends, from charitable to non-charitable, pay tax on accredited income, meaning to say fair market value of assets, less fair market value of liabilities, on that pay MMR. So now what is the amendment? Now this amendment is telling these provisions are not applicable to any trust or institution under the first regime, that is 1023C. Now they are telling, hence, I am now making amendment. Provisions of 115 TD, 115 TE, 115 TF will be applicable to any trust or institution under first regime as well. I think I have reached the time, I have far exceeded the time. My thanks to my good friend Harit and as Ahmedabad branch. And I am more so proud because I am, I am substituting the great and the best speaker in India, Dr. Girish Ahuja. Again, my thanks to Ahmedabad branch for having invited me. And with all pride, I can say that, I have been invited because the great Girish Ahuja could not address due to his, the medical problem of his brother. And here's wishing a speedy recovery to him. And my thanks to Ahmedabad branch again. Thank you, sir.
Thank you, Naveen-ji. It was a wonderful session, an amazing start of the session that it's a paperless budget. On behalf of Ahmedabad branch of ICI and GCCI, we are thankful for this sagacious session, clause to clause reading and understanding of the bill, government perspective, along with the deliberations you made to the government. There are so many takeaways and you made your best, sir. There are so many key takeaways, revised returns, the concept of virtual digital assets, faceless assessment, India being the pioneer in this. We are really thankful, and from bottom of our heart, we look forward for many more sessions with you. Thank you all members for the patient hearing, and thank you, Nitin-ji. Thank you so much. Have a nice day.
Thank you, ma'am. Thank you, sir.
Thank you.
Thank you. Thank you.
Bye-bye.
Bye, sir.